Hey, what's going on, guys? This is Kwak here, one of the Kwak brothers. Now, as you guys have heard, Wells Fargo has announced that they are closing all personal lines of credit in 60 days, turning all existing lines of credit into term personal loans, as well as no longer allowing any individuals to apply for personal lines of credit. Now, already a lot of the YouTubers out there are saying that this is the sign of end times and economic downturn. And of course, a lot of individuals are speculating as far as what this could definitely mean. And for all my Kwak loyalists out there who've been around for some time, you guys know that I like to talk about lines of credit as well as paying off your mortgage faster. So you might be wondering, what do I have to say about this in this situation? So in this video, I'm going to talk about why exactly Wells Fargo decided to take a massive doo-doo on its customers. What does it mean to the economy? And does it actually mean a sign of something bigger that's coming down the road that could be bad news for everybody? And if you've been watching other YouTube videos about this very topic, well, I'm going to go and start debunking each and every one of them. So let's go and set the stage and talk about what exactly happened. Over the weekend, Wells Fargo announced that they're going to choose to close all personal lines of credit, turning them into personal loans, as well as stopping and shutting down their personal line of credit department. But first, what exactly is a line of credit? Well, a line of credit works just like your credit card. In fact, your credit card is a form of a line of credit. But a true line of credit, what it allows you to do is connect it with a checking account. And what you can do is you can draw funds out of the line of credit into your checking account, effectively borrowing the money, but you can pay back the line of credit, allowing you to reuse it in some time in the near future. And anytime you draw money out of the line of credit, from that day on, you're starting to pay interest on the amount that you've drawn out of the line of credit. This can be very useful for cash flow management, as well as consolidating debt, all of your personal loans and credit cards into one single vehicle. And in some of the other videos, I talk about how to use a personal line of credit to pay off your mortgage faster, sometimes saving you up to 50 to 70% of your interest. So if you guys are interested in that, go ahead and check out the video down below. So when Wells Fargo says that they're going to close personal lines of credit, what they really mean is that they're going to close and freeze the line of credit so that the customer and client can't withdraw any funds anymore out of the line of credit. Now, if the client owes anything on the line of credit, they would have to pay back the balance over time on a fixed payments, just like any other types of loans. Now, with the decision of closing down the personal line of credit, the spokesman for Wells Fargo said, as we simplify our product offerings, we made the decision last year to no longer offer personal lines of credit as we feel we can better meet the borrowing needs of our customers through credit cards and personal loan products. So yes, it is true. Last year, Wells Fargo, JP Morgan Chase, as well as Navy Federal Credit Union did decide to close all their credit line department, including home equity line of credit products. And a lot of people speculated that, okay, COVID-19 definitely is taking a hit on these banks. And it was understandably assumed that it was what the Federal Reserve was doing during the pandemic to cause all these banks to shut down their line of credit departments. But here it is, Wells Fargo taking a step even further by saying, you know what? Yes, we stopped doing personal line of credit last year, but we're going to take a step forward and say we're going to close all existing personal line of credit and turn them into personal loans. Now, the controversy as well as the madness isn't necessarily about the closing down of the personal line of credit itself, but the effects. Now, closing down personal line of credit can have a negative impact on the consumer's credit report. And that has to do with the utilization rate. Credit utilization has to do with the fact that how much of your revolving credit are you using at any given time. To calculate your utilization rate on your credit report, let's say you have a $10,000 credit card and let's say you have a $3,000 balance. That means you have a 30% utilization rate against a $10,000 credit limit. So let's say we're going to go apply that example into this situation. Let's say an individual has a $20,000 credit card limit and additionally they have a $10,000 personal line of credit limit. And all of a sudden that $10,000 credit limit turns into zero. Well, now guess what? They have now 33% less in terms of credit limit, which means that they only have $20,000 of total credit limit available. And let's say if they had $10,000 balance on their credit card, but zero balance on their personal line of credit, and take the personal line of credit out of the picture, now they went from 33% utilization to 50% utilization, which has a negative impact on your credit. Anytime you go over 30 to 35% credit utilization rate, that's when you start to see a decline in your credit score, and it does hurt your future ability to get new financing. So why? Why exactly Wells Fargo is deciding to close all the personal lines of credit, and why are they doing this? Now, to expose the root cause of this, let's go back and wind back to 2016. Back in 2016, Wells Fargo was exposed of doing scandalous illegal activities such as opening bank accounts, credit cards, and loans with actual customer data without the customer's acknowledgement as well as their permission. And one of the main reasons why they may have done that was to bolster their balance sheets as well as to make themselves look good so that they can go borrow more money from the fractional lending system from the Federal Reserve. It's kind of like Wells Fargo cheating by injecting itself with steroids. But like all steroid usage, the cracks start to show on the users. In 2017, after Wells Fargo was exposed of its scandalous and fraudulent activities, the Federal Reserve decided to punish Wells Fargo by imposing a $1.95 trillion asset cap on the banking activity. What this ultimately means in plain language is Federal Reserve is telling Wells Fargo that they can't grow beyond a certain size of $1.95 trillion. It's kind of like when you're a little kid. Imagine your parent telling you that you can only grow up to 5'3". Wells Fargo is basically on a timeout until they can prove that they have restructured their government plan, they have a new strategy, and there's a new methods of making sure that this doesn't happen all over again. And this asset cap is right now still in place with Wells Fargo and expectedly to be removed by next year when Wells Fargo gets their crap together. And of course, 2020's pandemic didn't necessarily help with Wells Fargo and their profitability. It is reported by Bloomberg that they lost $4 billion of profit because of the pandemic, and coupled with the fact that they have an asset cap where they can't grow a certain size to protect themselves from such things as pandemics. So for the fraudulent activity, not only Wells Fargo had to pay millions and billions of dollars of fees, well, 2020 COVID-19 pandemic certainly put a damper on all their profit margins, and they can't grow to a certain size because of the asset cap. So if you were to step into Wells Fargo's shoes, not only are you getting pressure from the Federal Government and the Federal Reserve, but you got the market and economic forces of the pandemic and losses pressuring you on the other side, basically losing money on both ends. You can't grow and you can't make money. And guys, I'm not defending Wells Fargo for what they did. They certainly deserve what they've done because they've been a terrible and unethical bank for the last 30 years. And Wells Fargo had multiple occasions and opportunities where they can show their good side, they're slowly and turning into an ethical bank, and they can recover and repair the image and the brand. But they decide to go and say, you know what, screw all that, let's throw that in the garbage, let's go back to being a bad bank. Now, this is just my analysis as well as speculation as far as what I think it believed happened based on my research, my data, and my experience in the banking industry. Basically, what I think happened was Wells Fargo is dealing with massive liquidity issue, meaning that they don't have a lot of cash, they've been borrowing a lot of money from banks as well as the Federal Reserve, and Wells Fargo is thinking and looking at their balance sheet and saying, gosh, we have so much debt, we have so much losses, we need to figure out how to bounce back. And this is probably when one of the executives decided to look at their balance sheet and say, hey, what is this $26 billion of other assets that we can sell? And in this other asset category, I think this is where the personal line of credit belonged as far as the categorization. And this is where Wells Fargo is starting to think about ideas and strategization. And amortized loans, such as personal loans, mortgages, auto loans, can be sold to the secondary market for cash and profit. Meaning that, let's say I'm a bank and someone owes me $10,000. Instead of me waiting for months and years to collect that $10,000 of loans with interest, I can then sell my rights to collect those payments to other banks and investors for immediate cash. So if I'm ABC Bank and I'm talking to XYZ Bank, I can say, hey, look, XYZ Bank, I have this loan for $10,000 at 8% interest. I can sell you this right now for $7,000 cash. So you pay me $7,000, you have the right to collect $10,000 plus 8% or 10% interest. So this is how selling payments and selling loans work. So my thought here, my analysis is that they decided to go ahead and close all personal lines of credit, turn it into personal loans. Therefore, now they can sell those personal loans to other banks and hedge fund firms and investors for immediate cash, so they can get cash up front and they can go borrow more money and they can go and stabilize their assets as well as get more cash to go ahead and recover from a lot of the losses in the past. So ultimately that leaves Wells Fargo with more cash, more funding to go and repair a lot of the damages that they went through in the last 3 to 5 years from the scandalous and illegal activities and all the fees that they have to pay so that they can ultimately get this asset cap off their backs and grow beyond that $2 trillion limit. And in addition, I think Wells Fargo is restructuring themselves and positioning themselves for an oncoming second wave demand in housing market, allowing for more conventional loans and mortgages to be created and originated for the housing market. So to basically sum it up, Wells Fargo did this out of pure greed. I mean, why would you be surprised by that, right? They're looking for more cash, they're looking to get out of themselves, out of the asset cap, and they're looking for more cash and positioning themselves to meet new demands and start positioning themselves with products that make more money for the banks. And just like what I mentioned in all my other videos, banks don't make a lot of money issuing personal lines of credit or any lines of credit. This is why they kind of hate doing lines of credit, HELOCs, PLOCs, and BLOCs, and they really don't make a lot of money doing it. So it really doesn't surprise me that Wells Fargo is closing down their personal line of credit as well as freezing it so that they can get more cash and sell their personal loans to other hedge fund companies. So to all the YouTubers and YouTube videos saying that this is a repeat of 2008, the end of times is coming, this is a sign of an economic downturn, this is a start, maybe not. But to say that Wells Fargo in itself is a clear indicator for a start of an economic downturn, it's a weak argument. And if you're gonna go and lump the entire economic health on the back of Wells Fargo's situation, I don't think that's a good correlative conclusion as far as what the economy is actually doing. Just because there's a one bad divorce doesn't mean that the entire tradition of marriage is coming to end. Don't get me wrong, Daniel and I made videos in the past where we did talk about possible market crashes and economic downturn based on the situation data, but not on a singular event or isolated event like Wells Fargo. And keep in mind, guys, that Wells Fargo apparently has 44% chance of bankruptcy according to Macro Access, which also means that I wouldn't be surprised if Wells Fargo declares bankruptcy in the next 5 years, merges with another bank, or sells half or more of their assets to another bank so that they can go and restructure themselves. So guys, at the end of the day, I'm not really worried or concerned, and no, I don't necessarily believe Wells Fargo closing all their lines of credit to be a start of a market crash. To come to that conclusion, I need to see more than what Wells Fargo is doing to say that we're looking at a market crash. And for all the YouTube channels and YouTube videos out there making a big deal out of this, well, they're just looking for views. And as always, I'm gonna go and leave all my research links and articles down below so you guys can go do your own research and make up your own decision as far as what is actually happening. And if you guys agree with me, great, go and leave your comments down below. And if you disagree, tell me why I'm wrong. Go and comment down below, and I'd love to see some links and research, not just your own opinion and speculation. So guys, thank you so much for watching this video. If you got value from it, definitely subscribe and like this video. We do videos like this on housing market, real estate investing, as well as personal finance. So definitely go and subscribe, and we'll see you in the next video.